What happened in the September real estate market in the Temecula Valley? And what is this K-shaped recovery that we keep hearing about? That's what we're talking about today, starting now. Hi, Jessica Genung here with Active Realty. We really appreciate you stopping by our channel where we make a new video every single week telling you about our local housing market and what it's like to live here. We also love it when you hit that bell notification and subscribe to our channel because that lets the YouTube algorithm know that this is good content and it helps us reach more folks like you. So let's get to it. Lots of people, including myself, are a little bit puzzled by the past several months of the economy. We are in the middle of a pandemic that has devastated businesses and the economy. We have high unemployment, and we know that we are going to be dealing with this for many more months to come, not to mention if and when we do get a vaccine. Yet the Temecula Valley real estate market is booming, and so is most of the country, with a few exceptions, and we will talk about those in just a little bit. I'd like to share some info from an article that I was recently reading. Every year, Keller Williams has this huge event called Mega Camp, which is a mega training and networking event for that company. Gary Keller, who co-founded Keller Williams, had some interesting insight about the market of the moment. Also about how we got here and where we could be headed next. I'm going to link that article down below in the description. So Gary says that this, meaning the pandemic, is what happened to us in March, but it is not the first time. Looking back at what happened during the pandemics of 1918 and 1957, he wanted to temper the expectations of anyone holding out for a rapid economic recovery once the vaccine is released. He goes on to say that what we want you to take away from this conversation is that even if a vaccine does show up, history says it's going to take a year or 2 years for that to wind its way through the public and then have any sort of impact on the economy. So let's talk about the K-shaped recovery. Two different experiences are being felt, with some industries getting hit harder than others. Those at the bottom of the K, down here, are directly affected by the pandemic and resulting shutdown in business. But people at the top of the K, their businesses have been indirectly impacted, and many of them are having their best year ever. Many in the real estate industry are doing very well. One reason for this is that some people in our industry were able to adapt to the virtual environment very easily by just expanding on what we already do. Migrating to a virtual world in real estate sales was already underway. We just arrived there sooner due to the pandemic. Gary Keller goes on to explain, unlike professionals in the three highest earning sectors who have maintained around a 5% unemployment rate, the lowest earning industry, which is leisure and hospitality, experienced a staggering 21.3% unemployment rate. This type of inequality, he says, leads to economic uncertainty, which leads to fewer investments. Keller warned if something doesn't happen to raise the trajectory of the bottom tiers of society, it will soon be felt by all. But now, more than ever, geographic locations are experiencing very different results. The Temecula Valley is experiencing a surge of folks wanting to move here, while people are fleeing cities such as Los Angeles, San Francisco, and New York. They have had it with rising crime, overcrowding, issues with the homeless, poorly performing schools, protests that sometimes turn into riots, and the very high cost of living. The number of homes for sale in San Francisco, for example, is nearing a 2-decade high. All of these issues that people are fleeing are making the Temecula Valley rise in desirability in a major way, which you will soon see reflected in the numbers in just a minute. We hear a lot about how Californians are leaving the state in droves for states like Arizona, Idaho, Tennessee, Texas, and Florida. But lots of those Californians leaving the high-cost areas are also considering different areas within California, like our area. Because let's face it, you cannot beat the climate and the outdoor lifestyle here no matter where you go, and the higher than average prices are solely a reflection of strong demand due to high desirability. I'll talk briefly about my personal business in this month. I have seen a little bit of welcome reprieve for my buyer clients. I have had 2 contingent offers that we got into escrow recently, which is not easy to do. A contingent offer means that my clients have to sell their existing home before they can close on their new home. And one was actually a double contingency, meaning that their buyers had a home to sell first, and the home that they were purchasing here in our area was a pool home, which is super popular right now. We had to guardian angel on our shoulder for this one, I think. I'm super happy for these clients. The other contingent offer I recently got into escrow, I think we really lucked out with the timing, getting our offer in first and accepted quickly, because sure enough, later that week, as we were wrapping up the negotiations, they received many more showings and a backup offer that was actually higher than ours. But thankfully we were already under contract. Let's take a look at some numbers. As always, we look at single family homes, which means no condos, mobile homes, or land are going to be analyzed in this report. After that, Chris is going to talk about where we get our data and an observation we had about last month's Temecula versus Murrieta sales prices. Okay, starting with average sales price in Murrieta. Average sales price was up 12.1% in September of this year versus September of last year. Moving on to Menifee, average sales price was also up 14% September 2020 versus September 2019. Lastly, we're going to look at Temecula, where the average sales price was up the most at 15%. Moving on to closed sales in Murrieta. Closed sales were up 44.6% September of 2020 versus September of last year. Let's take a look at Menifee, where closed sales were up 21.5% this year versus last year. And Temecula takes the cake again, as closed sales in Temecula was up the most at 47%, much more than last year. Let's take a look at days on market. In September of this year, 2020, in Murrieta, days on market was down 68.1%. Only 15 days on the market for a typical home in Murrieta. Homes are flying off the shelf. Let's take a look at Menifee, where days on market was also down in a major way, 45.2%. And the trend continues on into Temecula, where days on market is down over 50%, 52.6 to be exact. Okay, lastly, we're going to look at number of listings starting in Murrieta. Number of listings in September of this year versus September of last year dropped 46.6%, almost in half. Moving on to Menifee, an even larger drop in the number of listings, 57.6%. And the same trend continues on into Temecula, where number of listings dropped 51.5%. Huge drop. This is the low inventory that we've been talking about for months and months. So I think Chris is going to come in here real quick, and he is going to talk to you about average sales price a little bit.
Hey everyone, Chris here. Thought I'd show you this market update playlist we have. We've been doing this for a long time now, since July of 2019. So this makes 15 monthly updates now, plus we have the 2020 annual forecast video in here. And you'll notice in the pandemic we started to call them coronavirus updates 1, 2, 3, 4. I actually need to add June, the fourth one, in there. Thought you might also get a kick out of seeing how we've improved the photography and the thumbnail design. Just wanted to embarrass Jessica with that one. This is the back end of our MLS. We have all these different software products. To get the stats, the InfoSparks is the tool I use here. On the left, we can put in the single family home or the townhouse or the condos. And we always say we just do single family home because that's what most of our buyers are. Another reason I wanted to go into the back end here this month was to show you on this average sales price. I could also do median, just to do a quick stat refresher. If you took that in college or had a good math teacher in high school, just remember that median is in the middle. So if there was 100 sales in a month, I'll pop over to closed sales here in a second, but say there's 200 sales in a month, number 100, 101, those would be right in the middle of your stats for the month. So that dollar amount on the middle, the median, might be a little bit more telling than our average, because we see these big spikes. And I went back to my data and went month by month and looked at the difference between Murrieta and Temecula. And we're talking to people who usually say 40 or 50,000. And now that I'm looking at the numbers, I see that it's not uncommon to have these big spikes. Like I see 100,000 in December of 2019, 100,000 in August of 2019. And that's a little more reassuring with the 118,000 difference we saw in August. This month, 82,600. That's the difference between Murrieta and Temecula. So I do think I'm gonna stick with average sales price instead of median, or maybe I'll just show both, or just do this from time to time.
Thanks so much for watching. See you on the next video. Bye.